Nvidia reports Q2 earnings on August 27, 2025. But instead of just running through the numbers, this analysis goes deeper, drawing on exclusive equity research reports to bring you insights you won't find anywhere else on YouTube. As of August 18, Nvidia is trading at $182.01, up 31.6% year to date. Since Liberation Day, the stock has surged nearly 93%. First, let's start with a company overview and see how Nvidia stacks up against its sector and the broader market. LSEG uses a 1 to 10 rating system, where 1 is poor and 10 is excellent. So keep that in mind as we move through the analysis. Nvidia's average score comes in at 6, which is roughly in line with the market. Compared to competitors, it ranks second overall, just behind Qualcomm, which scores a 7. This average rating is made up of several categories: earnings, fundamentals, valuation, and risk. I'll also briefly touch on insider trading, and I'll skip price momentum for now. Now let's start with earnings, where Nvidia scores a 6. The score reflects mixed expectations. For the period ended July 31st, 2025, analysts project earnings of 0.998 cents per share, slightly down from the $1.005 estimate 90 days ago, a 0.7% drop. Still, that's a clear improvement from Q1 earnings of 81 cents per share. Analyst recommendations lean heavily towards buy and strong buy, suggesting many still see room for growth in this AI-driven cycle. Next up are fundamentals, where Nvidia absolutely shines with a perfect score of 10. Breaking it down, profitability is a 10, debt is a 9, earnings quality is 4, and dividend is 10. Financially, the company is rock solid. Year-over-year revenue growth of 86.2%, gross margins of 70.5%, and a massive ROE of 115.5%. To put it in perspective, the average rating in the semiconductor industry is just 5.2, making Nvidia's fundamentals incredibly bullish. On top of that, both its gross margin and current ratio have consistently outperformed industry averages for the past 5 years. Now, moving on to valuation, Nvidia's weakest area with a score of 2. As many of you already know, it's considered one of the most overvalued stocks on the market, compared to Qualcomm, Intel, AMD, and Broadcom. Nvidia scores a 1 on the price to sales, a 3 on trailing PE, and 2 on forward PE, and relative to its 5-year averages, the stock trades at a premium almost across the board, except when comparing it to its 5-year price to sales and trailing PE averages. It's here we see a small discount, but I wouldn't consider that at all given all the other metrics which indicate overvaluation and the screaming bears on Wall Street. Compared to the S&P 500 and the semiconductor sector, it's priced at a heavy premium. Now, moving on to risk, Nvidia scores an 8, mainly due to its consistent return patterns and relatively low volatility, though I'd argue that this point is debatable. Since Nvidia is in nearly every major ETF, it offers little diversification. It has a high correlation with the S&P 500, 59% over the last 90 days, and 66% over the past 5 years. Risk analysis shows that its good and bad trading days are pretty evenly matched, meaning short-term swings shouldn't come as a surprise. On insider trading, Nvidia gets a score of 1. Over the past 90 days, CEO Jensen Huang sold about 675,000 shares, and in the last 6 months, insiders have offloaded more than 8.1 million shares. Overall, Nvidia's fundamentals are world-class, but its valuation remains extremely high. With the market cap pushing 4.5 trillion, the big question is, how much higher can it really go? Now, if you found this breakdown helpful, make sure to drop a like and subscribe to the channel. And let me know your thoughts on Nvidia in the comments below. And as always, thanks for watching, and I'll see you in the next one.